Felix here, and the Fed pivot is inevitable. Yes, inevitable. When is it going to come? Well, let me tell you in this video. Give me a couple of minutes. Before you do that, I want to encourage you to get your hands on a free list of America's most profitable stocks. It's a benchmark of about 350. Yeah, that many stocks. The most profitable ones out there. Get your hands on it. It looks exactly like this. You can filter by gross margin, by ROIC, by net margin, by cash conversion, by forward PE ratios, all the good stuff that you need to know, like nice big list to work your way through, completely free. It'll disappear at the end of the day. So it's your last chance to get your hands on it, felixfriends.org/America. Of course, none of the following is financial advice. My golden retriever came up with all of it. And my intention here is merely to give you some perspective, some education, some explanation of what's really driving the market underneath the market, because that really is what's going on. Most headlines don't really cover this stuff. So why are we going to get this Fed pivot inevitably? Give me a few data points that you, I think, need to be aware of. Pending home sales just out, and they are the lowest since 2010. So that here is the pending home sales, and then that's the month on month, and the year index is down here, which is worse. No, not worse than COVID, but COVID was an exception because of lockdowns. We got this really big deep dive, but 2010 was basically the last low that was this low, and it's about to get worse, a lot worse. Yay! What does that mean? Well, we can make money out of pretty much anything. So US home sales is the blue line here, and then interest rates, bank mortgage interest rates, the 30-year is now at 7.1%. And that's going to make this a lot worse. It's just going to get worse and worse and worse. People who are already like in the process, yeah, they're continuing, but people new to it, no one's going to build anything unless they're cash buyers. And inflation expectations are up. Yep, the Fed is going to have a little tantrum. There are martini glasses being thrown around at the Fed. Jay Powell is screaming, classical music arias at the top of his lungs because it's just gone up. And that's what they really are worried about. They're worried about this number here going up. The median expected inflation for next year is now 5%. And then the 5 to 10 year expectation is now 2.9%. Way above the target is 2%, right? So that's significantly above. That's like 50% above or 45% above. So they're not going to like that. Now, at the same time, consumers expect rate hikes for the next year. Yeah, that's what they're expecting. 80% of consumers think rates are going to be rising over the next year. And therefore, consumer expectations and sentiment are slowly but steadily cratering. When we hit the 50 mark, at the moment we're sort of between 56 and 65. When we hit 50, we're officially in a recession. So down here, that would be the recession territory down there. We're not quite there yet, but can you see that bit of data out here today? That little red one, that little kink here, that is what we're looking at. So it's going to get worse. And again, the Fed's going to like that. And at the same time, the market, and I'm talking here about options markets. Why? Because the options markets actually drive the stock market. And it's a little bit complicated at the beginning, but really important to understand. So the risk reversal index on the SPX, which is nothing but the S&P 500, is at the lowest level, I was going to say ever, but it's in lowest level in 2 years, which is pretty good. So what does that mean? It means the risk is to the upside. The risk is to rally up. So this is essentially a signal that takes put values and compares them to calls. So puts, generally speaking, are a bearish instrument. A call is generally speaking a bearish. So puts are bearish, calls are bullish. So puts down, calls up. And that is essentially going to come from tons of call buying or tons of put selling. That's where this comes from. Now, very likely, and if you understand a little about options, you might follow me. Otherwise, it might help to understand what's going on here. Why do you sell puts? Like we sell a lot of puts, not naked ones, but part of a hedging process. Because volatility is very high. When volatility is very high, options prices are very high. So selling puts is very profitable. Winston is wandering around behind me. I'm going to see Winston. Winston, what are you doing back there? What are you doing back there? Oh, there's a big tail. He's like, let me out. In a moment, Winston. So what's going on here? We're selling a lot of puts to take advantage of the high premiums that we're getting. So there isn't really this bullish demand for that many calls. There is a bit of it, 3,900, but not that much compared to, I think, the put selling. So at the moment, the center of all the options world is 3,800. Remember that number. That's an important one. We break through it, we're off on one, upwards. We don't, it's a resistance line. We might be going back down a bit. Now, buybacks are going to come back on stream now after earnings. There's always this blackout period with earnings. That's going to reduce volatility. So this trend is going to somewhat lessen. So we're going to see whether the market, how bullish the market really is, because people are going to stop selling puts because it's not as profitable. So a little bit of explanation there. But now, if you think this through for the Fed, we all know you cannot keep raising interest rates forever at these very, very, very large historic amounts of 75 basis points. You do that, you break stuff. They know that, we know that. You destroy the liquidity in the bond market. The UK's seen it, right? That was the Fed's doing. Look at the madness going on in Japan. If you don't understand what's going on there, Google it. Absolute nuttiness. They're spending another 200 billion or something to reduce inflation. I know, almost madder than the US. So rates will pause at some point and then they will be cut. That is the way the cycle works, and the market knows that. And therefore, Winston, who's pacing up and down behind me, thinks, look, we're likely to get a rally here because that's the way the market's set up. It's the way options are positioned. It's the way the CTA, the automated trading flows are positioned. It's the way the buybacks are positioned. And then we're going to get a rug pull afterwards because inflation isn't tamed yet. And we're going to realize inflation numbers like today, whoa, they were high, they didn't come down, and therefore that's kind of where I'm looking at the moment. So I'm kind of trading at the moment on a short-term up, followed by a bit of a crash. Very, very profitable, lots of volatility, which is lovely for us. And we are about 103% up on the year so far. By me, I mean me and Winston. Made 11% so far this month. You want to join us? Give us a ring here at felixfriends.org/call, /coaching, links down below. You can learn from me one-on-one and Winston, of course, key part of the coaching staff. And we teach you exactly my protocol, how I think, how I breathe, how I came up with it, my habits and everything else. Come and give us a ring. All you need is a 5-figure portfolio, or 6 or 7 or 8 or 9. You'll be in good company at all of those levels. If you're not quite there yet, if you're starting out, brilliant. I love people starting out. It's the most important thing you could possibly do in your life. Build the extra income stream to accelerate your learning. Let us help you. Hop over to felixfriends.org/options and join our 100 pre-recorded lectures program. Gives you the whole strategy, everything that I do. Plus, you get to see me trade live every week, which I think is really, really important from a transparency point of view. You got to ask the people you take education from, like, what are they actually doing? And then secondly, you can see me put the strategy into action, into place. So check it out, felixfriends.org/options for anyone starting out. And if you are above 5 figures already, go to felixfriends.org/coaching so you can learn from me directly. There's actually a coaching call going on as I speak with one of my brilliant coaches who's a university lecturer for 10 years. Another one of the coaches has been an investment banker for 20 years, trading options and so on. So the quality of our team is really high, and then there's also me, but Winston makes up for my deficiencies. So I appreciate you watching. I appreciate your comments. Does this make sense to you? Which side of the fence do you sit on this up melt in the market? And Winston says, where is he? Here is Winston. Winston, can we see you? Hang on. Let me see if you can see him. There he is. Winston, say hi. There he is. Either Winston or me, which one will you choose? I think I know the answer to that, so don't say it. See you on the next one.